Hello, my name is Timothy Lee Rogers Sr., and I'm the creator of the Smart Money Manuscript. But Tim, what is the Smart Money Manuscript? The Smart Money Manuscript is your roadmap to financial freedom. Inside this powerful course designed to transform your financial future, I've meticulously condensed over 1,000 of my public YouTube videos into 40 highly efficient lessons that span just 2.5 hours. This course is strategically designed into 4 phases to help guide your learning in the most logical and effective way possible. Phase 1 lays the groundwork, covering essential financial literacy like budgeting, banking, and taxes. In Phase 2, you'll move beyond the basics, learning about brokerage accounts, figuring out how much you need for your own individual retirement. You learn about how to do fundamental research on companies, and you'll also learn how to conduct technical analysis by looking at stock charts. Phase 3 empowers you to build a robust portfolio and leverage your capital using advanced techniques like options and futures, and it also teaches you the importance of backtesting your strategies. Finally, Phase 4 takes a deep dive into the advanced ICT concepts, giving you a professional edge. Each lesson includes a short quiz to help solidify your understanding. By the end of this journey, you'll have the confidence and tool that you need to make intelligent investing decisions, manage your money without fear or ambiguity. So if you want to be a long-term buy and hold investor, if you want to be a swing trader, if you want to be a day trader, if you want to trade stocks, if you want to trade options, if you want to trade futures, the Smart Money Manuscript is for you for $69.99. Yes, $69.99 for all of this here. Good evening, everybody. Try to get my mic to unmute. How y'all doing? My phone is going off. I was talking about the intro. You didn't hear like the intro? Zoom, could y'all hear the intro playing? Like I know at first you probably couldn't hear it.
I thought you was talking, but yeah, I heard the intro on Zoom.
Okay, yeah. Cause I was sharing the sound to make sure you can hear it, cause I keep forgetting I have to share the sound on Zoom from the computer. It automatically goes out to YouTube, but if I'm not sharing my screen, or I have to, even when I'm sharing my screen, I got to pick share the sound. I wish it was a way to like make that be automated. I wish it was a way to make it be automated, but it's not. All right, man. Good evening, everybody. I got a whole lot going on my screen. I got a whole lot going on my screen. If this is first time tuning into Tim's Tidbits, please allow me to say welcome. If it's not the first time tuning in, I still want to say welcome, but I want to give you a nice hearty, well, thank you for always tuning into Tim's Tidbits. If you don't know who I am, my name is Timothy Lee Rogers Sr., a.k.a. Aranya Grande. That should be Big Spider. You know I blow Spaniel. Speaking of Big Spider, y'all like my shirt? I got this shirt for Father's Day, right? It's a Spider Gang. On the front, they got me this shirt for Father's Day. And on the back, let me see if y'all can see the back. I don't know if y'all can see the back. Can y'all see the back? The back says, and yes, I will be there on the first day of school and graduation. Andre 3 Stacks. If y'all can't see it. Yeah. My kids got me that for Father's Day, because that's what I used to always be telling them. From Jada to Amaya to Timothy to Christopher, I used to always tell them that. I'd be like, yeah, I'm going to be there on the first day of school and graduation. And so they got me this shirt for Father's Day, and they put that on the back. This throwback, they got it. Matter of fact, it was right after Timothy graduated. I was like, y'all should have got me that before the graduation. They're like, well, you could just wear it next year on Christopher graduation. I was like, yeah, that's cool. That's true. But anyway, y'all ain't tuned in to hear all that, man. Y'all tuned in because this is, oh yeah, Ryan Grande, da-da-da-da-da. And you are in tune to another episode of Tim's Tidbits. And on this episode of Tim's Tidbits, this is the intraday price action recap. Yeah, hear me. Y'all like that little AI? Y'all like that AI with the intraday price action recap? Man, them folk be, hey, when I tell you AI is crazy, right? Let me see here. I wonder, let me see. Speakers. Got that set. I was trying to see if it was a way for me to do something, but I don't know if it is. Oh, speaking of, man, AI out of control. Let me ask y'all this. We're going to get into it, right? But let me ask y'all this. I'm going to go back here to this here, right? Can somebody explain to me, and put this on loop, right? Can somebody explain to me how this AI, now watch with my arm. Y'all see that tattoo on my arm? Do y'all see that tattoo on my arm? Right? Now look at it again. You see a watch on my wrist and a tattoo on my arm. Right? I just noticed this when I was getting ready to go live. Watch on my wrist, tattoo on my arm. Right? Watch on my wrist, tattoo on my arm. Watch on my wrist, tattoo on my arm. Now, this is the image. Right? Let me show you the image that I utilize and told Gemini to do this. This is the image right here. What do you see on this picture? You cannot see either one of my arms. Right? You don't even know if I got on a long sleeve shirt or a short sleeve shirt. You cannot see my arm. Right? You can't see the right arm. You can't see the left arm. Right? You cannot see my arm. Okay? You can't see the little titty on my lip. You can't see anything but my head, shoulders, and chest. So can somebody explain to me how Gemini knows that I have a tattoo on my arm? How does it know that I have a watch on my wrist? Now, mind you, it's not the right watch, but it's a black watch on my left wrist, and there's a tattoo on my arm. When I wear shirts, you can't see that tattoo. So how does Gemini know that? How does Gemini know that there is, come here, pause, right? How does Gemini know? Oh, I went too far. Back up. How does get out of the way, frozen screen? That's not gonna go down. I need that to go down. Well, let me play it slow. How do I play it slow? Speed. Quarter speed. Look at that tattoo. Look at that tattoo on my arm. How does Gemini know? How does Gemini know there's a tattoo on my arm? Right? Watch on my wrist, tattoo on my arm. How does it know? How does it know I got on short sleeve shirts? I turned, right? The body turned, and it put me in a short sleeve shirt. How does it know that that's a short sleeve shirt that I got on?
I wonder if it looked at your old videos.
That's what it had to do. That's what I was telling my brother, because it's connected through Google.
So I said it went through my, because if you look right there, you see my lip right there? I bust my lip when I was a kid. And so I got that little titty on my lip right there. Right, that little titty on my lip. If you look at the original picture, you can't see that titty on my lip. It just looks smooth right there. Right? But it knew to make that little titty on my lip right there. So it had to go through my old videos, my old pictures, and because it put a tattoo on my arm, it put a watch on my wrist, and it put me in a short sleeve shirt. When you can't see any of that, that's the original right there. That's how it starts off. You can't see any of that in that original picture. Tell you, boy, I'm talking about they done went through everything. They done went through everything and got. That's how they go back through when they take people's voices and stuff and make stuff. And they go back and they take people's faces and they go back and scour the internet and look for every instance it can find of that individual and put something together. Now, it say the Gemini models are trained to everything, videos and images that has been ingested into in the Google platform. That's why I say, man, I say they went back through my old information because it's through Google. So they went through my YouTube, my Gmail, anything that's got a picture or video of me, they went through and got it, and they recreated all that. Right? Recreated all that. I thought it was cool. I said, hey, it came out fire, but hey, man, I see why them old people scared of AI. Now, all right, man, let's go ahead and get into it. Hopefully I don't overload my computer tonight, because like I say, I want to start trying to clip out the content to make content for those who can't make it to the live and don't want to sit through a full live stream and try to figure out what was the live stream about. Okay. Shout out to everybody that's here. Do me a favor, hit a like for the algorithm. If you ain't subscribed, subscribe to the channel. You know what I'm saying? Share this out with everybody who you think might get some value out of it. And we're going to go ahead and get right into it, man. Let me share my screen and let's get to it. We're going to pop up to a daily chart real quick. Right? Like I said, we want to go through the entire week, and we want to look at how price interacts day to day. We want to look at how price interacts in each session, and we want to look at how price interacts from session to session. Right? That's going to be the new format of breaking down the price action recap, so that we can stay abreast of, how is price respecting bearish order flow, bullish order flow, what we got going on. All right. So looking at, wait a minute, why you showing on the daily? Let's go down and see where you're supposed to be showing. 60 minute, you're supposed to be showing there. Get out of here. Get off the daily. Okay. Now, as we see here, this was today's trading right here. So we had Monday's trading. On Monday's trading, we had a huge gap down, right? A huge new week opening gap. Okay. We can show that for those who don't understand what I'm talking about. Right. That's our new week opening gap. The difference between the close on Friday at 5 p.m. and the open on Sunday at 6 p.m. for Monday's trading. Huge gap down. We gap down, traded down, set relative equal lows with this February 17th low. Okay, we talked about those relative equal lows yesterday. All right, we traded all the way back up, right, and then took out Friday's high. So we took out Friday's low, took out the weekly low, and set relative equal lows with 17th. Then we traded all the way back up and took out Friday's high. Okay, we said that was a bullish Judas swing, And so since we were in a sell program, we was looking to see if that bullish Judy swing was going to turn into a wig snatcher, or if the new week opening gap was going to support price, right? That's what we was looking at yesterday. So today we see that price did not get supported by the new week opening gap, and we traded down and took out those relative equal lows. All right. So since we took out those relative equal lows, all right, we are still in this. We're still inside of this bullish dealing range that we set after making that monthly low over there, because this bullish dealing range is invalidated when we take out that monthly low, because we're extending the bearish dealing range. Right now we're in a sell program based off of the daily and weekly time frame. Remember, that was our high, that was our low inside this bearish dealing range, and we said that we were operating in the discount of that dealing range. And then we said we were right in the middle of the road if you looked at the discount of that dealing range. We was engineering liquidity in the middle of the road. We talked about this yesterday. Okay, so in the short term, right, we're working inside of a bullish dealing range, right? And we was right in the middle of the road of that bullish dealing range. And in just say intermediate term, we were dealing inside of a bearish dealing range, and we were inside the discount of that. All right, for those who wasn't here yesterday, we're going to get our Fibonacci tool, and we're going to just get consequent encroachment, and we're going to run a high from the high right to the low. No, we didn't talk. We talked about our 20-day look back, right? Our 20-day look back. That was our 20-day look back we was looking at. But for the whole range, right, we're down here in a discount, right? And if we get a Fibonacci tool and run it from equilibrium, if I get the right tool, you get a Fibonacci tool and run it from roughly equilibrium. We're just gonna eyeball it. That's close enough for government work, and run it down to the low, right? So that's what you see right there. Let me fatten it up for those who may be looking at it on their cellular devices. I'm gonna thicken up the lines a little bit. All right. So that's equilibrium this is equilibrium for the discount of that range, and this is equilibrium for the overall bearish dealing range. So that's why we were saying that we were in the middle of the road, just engineering liquidity. We're in the middle of the road. God dog it. Right? We're in the middle of the road on the inside the discount there. Now, today we traded back down, took out yesterday's low, and we took out a prior week's low. This is a prior weekly low right here that we traded below. So after taking out yesterday's low and the prior week's low, we got a strong rejection. And where did we come back to? Right back to the middle of the road. Right back to the middle of the road. So we have not extended the bearish dealing range, and we have not extended the bullish dealing range. We're still in the middle of the road. So overall, in intermediate term, we're in a sell program resting in the discount. Let me do it like this right here. Right, Tim, why do you keep stressing this? Because it's important to understand where you are in price. Don't like the red. Right? It's important to understand where you are. Don't like the orange for that. We'll just stay with the black. Okay? So, middle of the road, engineering liquidity in the discount of the bearish dealing range, right? I mean, bullish dealing range, right? Middle of the road, engineering liquidity in the short-term bullish dealing range, right? Middle of the road, and the discount of the bearish dealing range. Then today we came in, swept the sell side, then we took out 2 levels of sell side. All right, so what have we done? On the week, we have opened up, right, and traded down, taking out liquidity. Monday, we opened up, set relative equal lows. Then Tuesday, we traded down, took out those relative equal lows, and got a rejection off of it. Okay. So, in the very short term, right, we're still inside the bullish dealing range. And as we start the week, we have come down and swept sell side liquidity. All right, we took out the weekly low. We took out the weekly low yesterday. Then today we took out a daily low and a higher time frame weekly low, and then moved back to the middle of the range. All right, so starting off this week, price has traded, this was the open, we traded below the open and swept liquidity, and then moved back roughly near the open around equilibrium. All right, so that's what we've done thus far on the week, looking at the daily candles. All right, so right now, still in the middle of the road, and all we've done on the week so far is attack sell side liquidity. So in the sense of this bullish dealing range, if this bullish dealing range is going to hold and this long-term low is going to stay in place, you want to see a manipulation of sell side prior to going up without taking out our long range low, right? Since we want this long range low to stay in place, we want our intermediate term low to stay in place also. Bear in mind, there is room to take that intermediate term low and still not take our long term low. But for the short term bullishness that we have shift into, right, you will want to see that stay in place. All right, and from a higher time frame, March starts the 3rd month of the 1st quarter. What is the 3rd month of the 1st quarter? You're going into the end of a dispensation in time, right? So let's go to a monthly time frame real quick. So January, right? January, February, right? We started retracing back in January. We started retracing back. We closed here in December. We opened up, right? Went up and started retracing down, right? So we've retraced down, and now we're getting ready to end this quarter. Yes, it's the beginning of the month, but we're getting ready to end this quarter. So now that we've retraced back down and price is starting to engineer liquidity, not showing a willingness to want to continue down, not showing a willingness to want to continue up, right? And it's in the very short term, it has started to shift into bullish order flow, right? When you see candles expanding and closing, you may see them go up, go down, and close somewhere off the low, right? We think about it as far as a bearish candle, right? We opened, we went up, a bearish bar, we opened, went up, went down, and then closed somewhere off the open. All right, so that's what you're thinking about with this bullishness that has set in place on the lower intraday time frames, and the lower intraday time frames is starting to form some type of bullishness, and it's not showing a willingness to just continue down, right? Not saying that the NASDAQ is bullish, because the NASDAQ, we are still in a sell program, but we're watching these signatures on the lower time frame. Say, hey, every time we hit sell side liquidity, we're getting up off of it. And signatures of a buy program is, if you touch sell side, you get up off it. Down close candles will start to support price. Up close candles will resist price. So what are you watching here? This up close daily candle right there, right? For the bearish narrative, you want to see this up close candle resist price. You don't want to see a daily closure coming back up above mean threshold of this Monday's candle for the bearish narrative. All right, if it wants to continue lower. And then if we just continue to chop, we just continue to chop. But just think about bullish and bearish. That candle there should resist price and keep us down for the bearish narrative. And this short-term bullish dealing range, right? Once we extend the bearish dealing range, we have invalidated this bullish dealing range. And then it's time to start back over for the bullish narrative. All right. All right. Man, y'all do me a favor, hit a like for the algorithm. And if you ain't subscribed to the channel, please subscribe now. All right. Let's go into the intraday time frame. Right. Jump down to a 60-minute. Right. Looking at the 60-minute time frame, I can move all of this higher time frame stuff. Get out of here. Get out of here. All right, looking at the 60-minute time frame, this is yesterday's price action here, and we closed. All right, we opened, went up, and we closed there. Right, so that's yesterday's price action. Right, what type of dealing range did we create yesterday? We created a bullish dealing range. Right, we opened here. Right, we engaged sell side, went back, engaged buy side. So when you engage sell side first, then engage buy side, that gives you a bullish dealing range, right? So we created a dealing range yesterday, right? What did that sync up with, right? This short-term bullish dealing range that we had established on the intraday back here on Thursday, right? On Thursday, we went up, right, and established a bullish dealing range, right? Extended it up right there, extended it up right there, came down to a deep discount, extended it up right there on Wednesday, and then switched back to a hey, what happened? Did it crash? Did YouTube crash? I think I got it going crazy. I think I got it going crazy because I'm recording and streaming. I'm recording and streaming, so it don't like it. And then I'm recording at like a high, I'm streaming and recording at like a high bit rate. So it's glitching out on the YouTube side. It ain't that I can't lower the quality. I can't lower the quality while I'm streaming. Yeah, there's nothing I can do about it right now. Hopefully, cause I got it streaming at a high quality and low latency, and I'm recording at a high quality. I'll adjust it for the next one. Hopefully we can get through this without acting crazy, but I'll adjust it for the next one. All right, let's go ahead and try to get through it quick. Okay, so yesterday we took out the weekly low, traded up, right, and took out short-term buy side. Okay, that was the bullish Judy swing we was talking about, and we said for the bullish Judy swing, you want to see the new week opening gap support price. Bear in mind that since the new week opening gap is below price, it can act as a magnet for price. Then, as you see overnight during the Asian and the London, price just spooled all the way down into the daily low. Right, so we came down, took out yesterday's low. We traded down below, like we said, that prior week's low. And then as we went into the New York time zone, we traded back up, right? Excuse me. We traded back up into the previous low there from that blast up, right? From that blast up, we traded back up into that bearish order block right there. And then we dropped down immediately and took out the low. And this also gave 930 an opportunity to take out the daily low and take out that previous week's high. So we engaged liquidity during the London, and we engaged liquidity during the New York session, right? Giving it an opportunity to trade below a prior session low, below a prior day low, and below a prior week low during the New York session. Then once we took that liquidity out, right, we came back up and closed right at the low. God dog it. I'm gonna have to stop this. Stop that. We back. Are we back? Are we back? Mic check. Mic check. Are we back? We back. Are we back? Are we back? Okay. I just stopped. I stopped. We back. Are we back? I stopped the recording. Okay. I just stopped. I stopped. We back. Are we back? Okay. I can hear it now. I stopped the recording because it was acting crazy. Okay, so we immediately, right, from the open, we immediately came down, right, and established a new bearish dealing range immediately, right? So what is price doing? Like, man, we said we're engineering liquidity right here in the middle of the road, right? It's still doing the same thing. I was thinking that it was because I was recording, but I'm starting to think it might have something to do with my internet over here, because it keep giving me errors saying YouTube is not receiving enough video to maintain smooth streaming. It's probably got something to do with my internet. Hopefully y'all can see me, man. Hopefully y'all can see me. It blacked out a couple times for me, but now it's got this big old error up there, and it say poor for like the streaming health. And I can't change nothing while I'm streaming. Like, it won't let me stream. It won't let me like adjust the bit rate or nothing like that. Now, and I can see it look mad fuzzy right now. And see, now it say excellent again. All right, so it so again, like we said, Monday we created a bullish dealing range. Then we immediately came down and established a bearish range and extended, right, this short-term bearish dealing range right here, which is still, remember, it's inside the short-term bullish dealing range. Trading below that low right there invalidates the short-term bullish dealing range that was established back on Thursday. All right. You say, Tim, how can you have dealing range side, dealing range side, dealing range? Just like this. Y'all see it? Y'all see it? What creates a dealing range? Take out buy side, come back down, take out sell side. You just established a dealing range, right? Trade it back up to the premium, right? Manipulated out internal liquidity, came down and extended that dealing range, right? Just like that. All right. And we have come down and swept the last internal liquidity inside that bullish dealing range right there. Right? That was our last piece of internal liquidity right there. So now there's nothing left but the low of that dealing range. All right. Y'all, hold on for a second. Hello? Yeah. So, now we're back in the middle of the road, because if we look at our bearish dealing range that we established, right? This is the highest high. This is the lowest low. These are the quadrants on that bearish dealing range right there, right? Highest high, lowest low. Looking at where we are, we're right in the middle of the road. All right. Tim, you keep hollering about winning. That's where we at. That's where we at. That's why it just sounds like, hey, I'm talking about the same thing over and over and over again. I'm looking at both sides of the market. People like, hey, look, you're calling it up, you're calling it down. Well, just call one direction. Which way? You don't know which way price gonna go. When you're in the middle of the road, when you're engineering liquidity, you don't know which way price gonna go. You're waiting for the algorithm to tip its hand so you can see if it's got the big joker or the little joker, if it's got the ace, if you're trying to see what it's working with. But we keep coming back to the middle of the road right there. We're right in the middle of that dealing range that we said we established. Right in the middle on today's close. We have no more information than we already had. All right, so looking at what we did on the day, price opened up, beeline down into the sell side liquidity. All right, swept the short-term low overnight, and then immediately shot back up above midnight and start to pull back into the range. Okay, now on the day, we said that we created a bearish dealing range, even though this includes a piece of yesterday. Now today's high and today's low will be here. Now based off today's price, right, your new dealing range will look like this, right? That's the highest high, that's the lowest low, right? And as you see, we're still right there in the middle of the road of the bearish dealing range that we established today. Okay, right there in the middle of the road. So what have we done? We established a range, pulled back up into a premium, and now we're right there in the middle of the road. And right now price is being supported by a bullish order block that's sitting right on top of a balanced price range. Okay, so what are you looking for the bearish order flow that you're in, right? You want to see that order block give up the ghost. You want to see this fair value gap give up the ghost. You want to see that order block give up the ghost, right? You want to see this bullish breaker give up the ghost. You want to see all of these discount PD arrays give up the ghost, slide down, right? Why? Because when you're bullish, right, you want to see down close candles support price. But when you bearish, you want to see price eat through down close candles. When you're bullish, you want to see bullish PD arrays support price. But when you're bearish, you want to see price eat through it. Right? So if price is truly bearish based off of this bearish dealing range that was established inside of this bullish one, inside of this bearish one, right? Price will continue down. But you have to be wary because we're in the discount of a dealing range and price has started to respect, should I say, bullish order flow, because you buy in a discount and you sell in a premium. All right. Doesn't mean that it has to pop all the way back up to the premium that you're eyeballing, right? It just has to go back up to some sort of premium. But every time price goes back up to a premium, right, it doesn't invalidate the buy program. It comes down to a certain level of liquidity, right? Price moved back up, came down, moved back up, came down, moved back up, came down, moved up very far, came down, moved back up, came down, moved back up again, right? And still has not invalidated, right, this range here. We're stuck right there. And where did we say we were? In the middle of the road, right? So we're just right there engineering liquidity. We're consolidating. We're not breaking outside of the range. Okay. Looking at this 60-minute time frame, the 60-minute time frame did not give many opportunities to participate in any. It didn't, for me, unless you just trade PD arrays based off their creation, right? Unless you just trade it based off their creation, there's only one time right here when price came back up and started to consolidate in this piece right here. You got a bearish fair value gap right there, and you have this reclaimed fair value gap that I marked out last night while watching the London resisting price and pushing us down into the daily, prior weeks, and overnight / London low after 9:30. Right, came up into it there, then came down. That's the only time the hourly time frame gave you a type of retracement entry that the ICT concepts teach us. Right, establish it, retrace back to it, and deliver. Okay, came down, established the reclaim, established the fair value gap, traded back up into the reclaim, traded back up into the reclaim, into the fair value gap, then traded back down into 1, 2, 3 levels of liquidity. After that, after trading below the liquidity, we started to displace away, but then the market, as we start to pull back, the market closed. It never pulled back down. Right here at 4 o'clock, it got back down into the wick of the bullish order block, right? So it did get back down into the wick of the bullish order block. So looking at, if you're watching all this as a balanced price range and you don't want to see price touch that, right? Looking from the high down to the low where we left there, right? Up under that order block right there. And as you see, pull back down into that discount of that range, into that order block right there. And that's where price closed that on the day. All right, so for the hourly time frame, it wasn't much opportunity to participate in either direction based off of retracements. Now, if you look at as the liquidity sweep there, the displacement up, the order block being created there, right? If you trade off the creation of the order block, you could have got in there for like a move to midnight. If you trade off the creation of the fair value gap, same spot, when that candle closes, you can got in there and trade it up to there. it just would have been one of the things where if you trade like that, where do you put your stop? Okay, so if you trade like that, okay, enter, where do you put your stop? If you're trading based off of, okay, we created this order block, I guess you could put your stop there. I don't trade like that, so, but I'm just going off based off of the PD array itself, right? So put it at the low of the order block. Doing it based off the fair value gap, put it at the low of that first candle. In this case, the low of the first candle is the safe stop also, because that's the swing low of that move. That's just, but if you're just trading like that, that's a huge stop just to go back to midnight. All right, so pretty much nothing to offer on the hourly time frame. All right, drop down. I just went straight down to 5 minutes during the Asian time frame. Right, it was a mean sell-off. Right, price did expand, take out sell side, retrace back up. But when we look at the price, let's look at the price and see how it functioned, because I didn't watch price last night, so let's see what it did. Okay, so during the Asian, we expanded down, right, took out the sell side, retraced back up, right, we came up there, that's our lowest low, came back up into a slight premium right there equilibrium, right, traded back up into equilibrium to a slight premium, dropped down again, right, dropped down, made a low, pulled back up into a premium, manipulating out sell side. But what I'm noticing here, even when it's retracing back up, looking at this 5 minute time frame, right, there are no imbalances up here, right? There's no imbalances here. It's moving back up on either side of the curve, right? There's no imbalances on either. It's moving back up into a premium, but there's no imbalances. You have implied fair value gaps here, right? You got implied where you got the wicks overlapping, so you got implied fair value gaps in here. And for those who don't know how to mark out an implied fair value gap, right, you take the consequent encroachment of the wick to the left, and you take the consequent encroachment of the wick to the right, and then that area in between the consequent encroachments, that's the implied fair value gap right there. But outside of that, there's no imbalances in there, right? Because everything is efficiently delivered, right? Everything is efficiently delivered all up and through there. Okay, came up, manipulated out sell side, buy side right there, same thing, no imbalances there. It's a bunch of immediate rebalances going on, right? We dropped all the way down into consequent encroachment of the new week opening gap, trade back up into this fair value gap, right? We're leaving this area blasting out. We got a suspension block here. When we first left that as a breakaway gap, right? Traded back up into that fair value gap. All right, this one here was in a discount of this drop down there, so we created an inversion there. Came here at 10 p.m., manipulated out buy side, dropped down, took out the low, traded all the way back up, then take the buy side, deep retracement, came down and continued down. Okay, so what do we have there? What do we always say? When price tends to make a big move, then it'll just kind of do, right? Big move, do, going into midnight right there. All right, then coming out of midnight, we expand, manipulate buy side, expand, trade back up into the fair value gap, expand, right? Trade again here. We don't have them imbalances there, right? Look like it might be a small, can't really tell there to see if that's a suspension block or not. Zoom in on it and see. I've lost it. Oh, right here. So no, yes, this right here closed at 703.75. That one opened at, nope, not a suspension block there. So again, right? We're not getting those imbalances. You got an implied fair value gap there, but very efficiently delivered, right? Everything is very efficiently delivered. All right, going to there. Once we break that low, right, it starts to clean up, right? Fair value gap, trade back up into it, drop fair value gap at that sell side liquidity, right? Trade back up into it, drop down, right? Fair value gap, trade back up into it, and then we start getting very efficiently delivered again. But we're continuing down, but it's doing, right? Come here, create a fair value gap, leaving there, instantly create an inversion, sweep liquidity. Then we move back up, right? Get our bullish breaking market structure over here. And then we come back there, rally up, come down. This is after 9 a.m. Manipulate that London low, right? So the London session, Asian session, London session, all straight down. No type of manipulation at all, just all straight down. The manipulation happened over here during the New York, from the New York PM, right? So the New York PM manipulated our buy side, breaking market structure, right? Trade into, well, technically, Michael be teaching when you got these imbalances inside of there, that's really not a breaking market structure because it's still inside of this range, right? So technically, based off that, your breaking market structure wouldn't come into here, right? It wouldn't come into there because this is when we formed the structure and then left, then we came back outside of it there, right? But you can, you know, that low took out that high, so for me, that's still a breaking market structure, right? Because that low took out that high, right? Traded up, then we start to continue down. So the manipulation happened here. Then this is just a continuation all the way down to there, right? Just continuation all the way. Quick sell model, right? Low resistance all the way down, meaning it wasn't like a lot of back and forth, right? Then once we got down at the bottom and completed that market maker sell model, right, going into the New York session, right, as we're going into the New York session manipulated out the London low, right, and then got a bullish breaking market structure, consolidated there, establishing structure, another structure point there, blast off, retrace back down to a discount, extended it up, and then came back down and closed right around here. Now after 6, we've opened up, dropped down into that order block in that area of consolidation, push back up. Now we move back down into the order block now, right? So in this short time, right, took out liquidity, took out sell side, right? So then we come here, latest expansion leg. From there, right, came down, right, swept that sell side, rallied back up into a premium, and then now we've come back down into a discount in that order block right there, right? Inside our latest expansion leg, coming down, pushed up into a premium. Now we've come back down, and right now we're finding a little bit of support of that order block, but not really strong support, because when you look at that last down close candle right there, right, you can see that we are respecting mean threshold, but we're still showing that heaviness right there. Okay, gotta remember what we said. If this bullishness that we got after sweeping that London low and coming back up and establishing that, if this is going to hold price, you want to see, right, these PD arrays in this area support price. But if we're just coming back up to a premium, right, come over here, this is our entire, oh, we already got that, this is our entire range on the day, right? All we did, we do come back up to a premium above midnight, right? And where is this? In the premium area too short, right? Failed to get to the upper quadrant, right? In a premium, that will be the fine place to short back down. Look, we're right there in the middle of the road. Okay. Price has been sending people to the reset line. Sending people to the reset line. I know you might be looking and saying like, you ain't giving me no help, Tim. This why, when prices and conditions like this is why Michael teach, man, just sit it out. Go and tape read it, right? Go and tape read it, but just sit it out. Because it's very, very difficult to get into trades and hold them when prices trading like it trades during the New York session lately. Look at the London and the Asian, and then look at the New York. Right? Which one looks like better price action to be participating in? All right. And remember this morning, gang, when we did the pre-market analysis, right? What do we talk about? The Asia and the London had a very large move down, and after a very large move, we anticipate price to be klipatuki, trash, barus. What is it? Baruso? How you say trash? This man, is it Baruso? Barusa?
Basura.
Hey Siri, how do you say trash in Spanish?
Basura.
In Spanish, trash is basura.
Basura. That's what they said. I said it's basura. Complete basura. Trash. And that's what it was. Right? Somebody asked me today, when I get up, is it like a feeling that I have I should trade to London? No, it ain't a feeling that I have. I look at the price, and if I see basura, I go back to sleep. If I wake up and I see, hey, I know what that is, then I participate. If it's giving me measurable risk, I participate. All right. But again, looking at our let's find our 930 open. That's our 930 open right there at that line. All right. That's our 930 open right there. Looking at the Asian and the London, right? And then after the London, this is our 930 open, right? This is our pre-market open roughly here. So this is pre-market and this is the New York session, right? Which one of these? The New York morning, the New York afternoon going into the lunch, the New York evening. Which one looks like price you would want to be participating in? And we talked about it. After a move like this, going into the New York session, I told the gang, I said, I ain't in no rush to get off of here and try to trade nothing. Look at it. Look what we did overnight. I'm anticipating this New York morning session to be dookie. And that's exactly what it was. Let's look at the volatility on it, and then I'll call it there. If you got any questions, go ahead and feel free to start asking now. Do me a favor and hit a like for the algorithm. If you're not subscribed to the channel, let's go. 930 candle from peak to trough, 111 3/4 points, just shy of. That's a 5-minute candle, by the way. Just shy of 112 points. The 935-minute candle, 112 points. The 935 candle, 158 points. Reset line, 96 points. 123 points. Reset line, right? Going back and forth in the same range now. This is all in the same range. 80 points. 87 points. 102 points. And this is all. This is going 5 minutes at a time. 81 points. 71 points. Then we push outside of the range. 91 points. Push outside of the range. 58 points. Push outside of the range. They're getting smaller and smaller and smaller. Like, you know, like that momentum is slowing. The volatility is slowing down, right? Get down there and sweep the liquidity, right? Then we retrace back up into the premium, right? Now, on a normal low resistance liquidity run day, when price opens up, takes out a high, comes over here, displaces down, takes out a low with a fair value gap, right? If you sell this fair value gap, what is your low hanging fruit? This low right here. What did we not get to today? This low right here. Phil is just in there. Just gotcha. Oh, you got to be quicker than that. Now, mind you, even though Phil is in there playing with the buttons, right? If you, just say you short it right off that fair value gap, and if you come down here, it's got as low as 69 and a half points, right? And getting picked up, the most amount of drawdown you would have gone into was 30 points. So, based off of this, right, there was room. Now, I ain't saying you could have done it. There was room for price for you to etch out a 2-to-1 risk to reward in this range. Not saying that it was tradable or whatever, but based off what the algorithm did here, there is no reason why, outside of manipulation, that price, when it hit this fair value gap, shouldn't have taken out that low right there. That is why I've been having you focus on the fact that price is not showing a true willingness to invalidate this short-term buy program that it has created. And we're still up here in the middle of the road, chopping people head off. We go above equilibrium, come back to fair value. Below equilibrium, come back to fair value. Above equilibrium, come back to fair value. Engineering liquidity. Anybody got anything for me?
You think
Any questions, concerns,
Apple will shake the market
or
tomorrow?
comments?
Blue, you hear me? 10?
All right.
I don't think 10.
I don't see nothing and I don't hear nothing. Make sure I got my speakers up. Is anybody trying to?
Yeah, can you hear me now?
Oh, I hear you. My speakers was turned down.
Yeah,
I'm sorry.
I was talking to myself there, man. For
My speakers were turned down. I be
15 minutes. You think
You been talking all that long?
No, I'm only messing with you.
Oh, okay.
You think Apple's gonna save the market tomorrow with that event they got going on?
You say, do I think Apple is going to save the market tomorrow?
Yeah, they got some event going on, so it'll be interesting to see how that works out.
Let me see here.
Oh, you gonna get the crystal ball, huh?
Let me see. Oh, crystal ball. Oh, crystal ball. Will Apple save the market tomorrow? Oh, Apple's in the corner right there. Uh-oh. I saw Apple in the corner, so you see Apple right
there. There you go. It's gonna save the, there you go. It's gonna save the, you know, it's funny because I did a lotto with Apple. So I bought a $300 call for $1. I figured, shit, I spent $2. You never know, right?
Let's see. Wait a minute. What is Apple?
AAPL.
AAPL. All right.
Yeah, we don't know what's happening. But I figure, shit, I throw $2 at a lotto machine every day. I could throw $2 at a $300 call. You never know.
All right. You say you got a call.
Yeah, I got a $300 call for Friday for $1.
Okay.
$1.
All right.
$1. Not $100. $1.
So you say a $300 call?
Yeah. That's right around the corner, man.
Okay. All right. So
No.
what was that? Do you know what the IV was on that call?
Give me a second.
Woo-wee. Woo-wee. I think I might have to go ahead and do that options course.
48%.
28% on the IV?
Oh, 48.
48 on the IV?
Yeah.
Ooh.
$1, man. It's only $1. I'm like, I play the lotto every day.
Okay, so 48% on the IV. All right. Now, that IV is up there, right? So, whew. Yeah, I think they use like a 60 don't quote me on it right now. It's like a standard deviation that they use for the implied volatility, right? And so now it's saying it's a 48% chance for it to move within that range, right? That's close to 50-50, right? That's close to 50-50, but that's still a high IV. Now, if tomorrow after the event, right, which is Wednesday, if tomorrow after the event, once whatever the news is come out, if that IV plummets, you're going to get hit with what they call IV crush. IV pumps up the price of the premium. IV pumps up the value of it. It directly affects the premium. It pumps it up because the higher chance it is, it's going to be making these deviation moves, the more expensive it's going to be, right? So if you buy it when the IV is high, once the news come out and you haven't sold it off while the IV was high, you get hit with what they call IV crush. So if you get it, it's at 48% IV, and then after the news come out, let's just say the IV drop down to 20%. Whoo! That's going to kill the premium. And so that would mean you would, if it drops from 48% to 20%, right? That would mean you would need a rocket ship of a move toward that 300 in order to make up, right, that amount of premium you're going to lose based off that IV dropping, right? And anytime you're going into events, the IV is going to be pumped up. If you're going into earnings, the IV going to be pumped up. If you're going into news announcements, it's pumped up. Press conferences for the company, it's pumped up. They're going to pump the IV going in front of big news. Going in front of what is it? Not DES. What's the annual electronic thing they do every year? I can't think of the name of it. Is DES?
No, CES.
CES. What? Shut that door for me, son. I can't even hardly hear nothing. Can't think. Just throw that on my bed. Blender. I can't hear nothing with that blender going on. Yeah, CES. In front of CES, they're going to pump the IV. Now, looking at the chart, right? When you think about options, you want to think about the Greeks first and the technical second, right? Greek first. And I understand this is just a lotto. You really don't care. This is just for like you and everybody else right now. Greeks first, technical second. All right, so your Greeks got to make sense for the position you're buying, right? You want to look at your Greeks, understand your Greek. You want to look at your delta, your IV, right? You want to look at your theta. You want to look at all the important Greeks that's going to directly affect the cost of it. Your IV going to affect your premium directly. Your delta, right? That's going to affect your premium based off of the movement in the price, right? So your IV is going to affect your premium based off of the implied move, what they think it's going to do going into this event, right? It's affecting your premium based off the applied move, right, within this deviation. It's like, you know what I'm saying, you got it's going to trade within the range, just say we're going to say 62%. I can't remember the number off the top of my head, but we're going to say 62%, right? And we go in here and we do 263 plus is it, let me see, it's a 62% chance that it's gonna move 48%. I got to remember it. I'm trying to remember it on the fly, but 263 minus, nope, that's too much. That's too much.
Hey, we in the discount of the 1 hour dealing range, man. I Hail Mary would be nice.
Yeah. That's but like just say you got it implied ranges to 270, right? So we're looking at let's see, just say the implied range is to 270 and 260, right? That's your implied range based off of your IV, and then it's going to affect the price of your premium, you know what I'm saying, based off how it move. Your theta, right, is going to be the time value, how much time you got it for. You got it for 3 days, so the theta got to be at 0 at the end of 3 days. So each minute that go by in a really short term is going to eat away at your premium, right? Your delta is going to affect your premium based off of the move up or down, like a $1 move down or $1 move up, right? Incremental too, but you know we think about it in $1. If your delta is 0.3, if it move up $1, your premium increase by 30 cents. Move down $1, your premium decreased by 30 cents. Okay, so you're looking at it, say, okay, these are my Greeks, this what's going on, right? And so you're buying it based off, am I getting this at a discount or a premium based off of these Greeks? Is it pumped up based off the IV? Oh, I'm paying premium prices for this, I don't want to buy it. Is it low based off these Greeks? Oh, I'm getting it at a discount, it's cool, I'll buy it. That's where you make your decision based off if you're going to buy it. Then you look at the technical second to figure out when you want to buy. All right, so now it's already bought, but let's look at what price got going on. So right now,
yeah, my delta dropped to 0, so I need a Hail Mary, I need a Jesus coming and hooking up Apple. I need everything.
So your delta at 0 right now, right?
It wasn't a 0 when I purchased it. It's 0 right now.
Oh well, when the market closed, a lot of times the stuff don't show.
Oh,
like when the market is closed, a lot of times you can't. It don't have any information to give you because the options only trade during a certain window. So when the market closed, like a lot of the information ain't being transmitted because they have nothing to calculate off of, right? So you'll see what the delta is tomorrow, right? What was your delta when you bought it? Like a 0.1?
Yeah, it was like $1 for $1. It was,
yeah. It was like a point.
Yeah, it was just the Hail Mary. I figured shit, $2, man. I'll throw $2 at a lot of machines.
All right, so now with that being said, looking at what Apple has done, right, daily, right? So over the last 20 days, right? Okay, so over the last 20 days, is there any day near looking like a $35 move? You said a 300 call, right?
I got a 300 call, man. I was like, I want cheap lotto. I need a blessing.
Like a $30 move. Okay, so
What's crazy is they could do it, right? Especially Apple. Apple could definitely move it.
that's what I'm saying. Looking at what Apple has done, right? It is like this is a $30 move right here. This entire dealing range right there is a $30 move, and that's over the span of 11 trading days. That's a $30 move. So based off just looking at the chart, the likelihood of getting a $30 move in one day on Apple, it ain't really looking that good. Not saying it's impossible.
I know.
Not saying it's impossible, but a $30 move. Okay, now, and then looking at the actual technicals. Okay, looking at actual technicals, we have, right, this is our dealing range here, right? This is the dealing range that we're working in. That's our highest high, our lowest low, right? We're pretty much right in the middle of the road, right? Apple hanging right in the middle of the road of the current bearish dealing range that we're in. So we came down, price traded down, right? Swept liquidity. Okay, so we came down to a discount, swept liquidity, right? Then we rallied back up, swept out buy side, right? So once we came and swept buy side, when we came back down, we did not continue down, right? So the buy program is still intact. That's one good thing going in your favor right now. The buy program is still intact because once we came down to a discount, swept liquidity, trade back up, had a bullish break in market structure, then we had a deep retracement back down into the inversion fair value gap and rallied back off of that. Now, the one thing I don't like about it is once we rallied back up to this order block, we had this huge pullback into the order block. So we've entered high resistance, right? We had this nice sweeping, right? We had this nice sweeping low resistance here. But then when we traded back down into the inversion fair value gap and we took off, right? We've pulled all the way back down into the order block, right? So we're right back in some high resistance, and we see why, because we're right there at equilibrium. So we're here just engineering liquidity, right? We're right in the middle of the road. All right. So we've yes, we bought down here. You bought down here in a discount, right? That's good. The buy program is still intact. That's good. But we're right here in the middle of the road going into some big news. All right. So, Apple is typically, just like every other company, is typically buy the rumor, sell the news. Okay. And you said when they're doing it tomorrow, when they're doing the conference tomorrow?
Yeah, tomorrow.
All right. Tomorrow is the conference. So a lot of times Apple be buy the rumor, sell the news. All right. So right now we haven't been, well, I guess you can look at yesterday maybe as buy the rumor, because we did have a bullish day yesterday after this huge pullback into the order block. Right, we pulled back into the order block, had a bullish day, and then we had an inside indecision day right here. So it ain't giving you nothing, right? We got an inside indecision day right there at equilibrium. So it ain't giving you nothing to go off of. So right now, that much of a Hail Mary, nah, I don't see it now. 30 points off of that news when we had, it took us, what we said that was, how many days to move 30 points? 11 days to move 30 points, right? Yeah. The largest day we had was this day right here, and that day from peak to trough was less than $16, right? So less than $16. I keep saying points, but less than $16, and that was the largest day, and that was that's dividends, that's earnings, right? So the day after earnings wasn't even that big. So we had earnings here. See how we had earnings, that indecision day on earnings day. Then the day after earnings, we had a huge gap down, swept liquidity, and then pumped up, right? So the day after earnings, it didn't even, it got a what is that? The day after earnings from peak to trough was a little less than $10, right? Like a $10 move, right? The day after earnings. So we got our indecision day coming into this announcement, right? So based off of history of what it done, right? If it's super good and people really want to get behind it, you know what I'm saying? Might get a 2-3% day, right? But then they go back to how much of an IV crush are you going to get after the announcement comes out, because you always get that IV crush after the news drops, right? You always get that IV crush after the news drops. So yeah, just
100 points would be a beautiful blessing.
Oh man, yes it would. Yes it would. But all in all, I'll say the two good things about any position that was bought on Apple right now is that the buy program is intact, right? You're buying on a pullback to the discount at a bullish PD array. You see what I'm saying? We pulled back into a bullish PD array. So that gives you measurable risk if it goes against you. Now, in the short term like that, right? In the short term like that, I wouldn't have been buying that far out of the money. I wouldn't even buy a 300 for a 2-year position.
I just did it because it was $1. I figured.
Yeah. I get it. And it's like when you play lottos, like when I used to play lottos like that, I want to play lottos on companies that were known for having like huge gap ups or gap downs and known to be like super volatile throughout the day, right? And this was back like, you know what I'm saying, like post COVID when markets was, when everything was like moving. It was either shooting up, shooting down. It was like moving. Most stuff was just going straight up, right? But like going overnight, like I didn't buy lottos going overnight, right? Because of things like theta and IV crush. You know what I'm saying? I didn't buy them going overnight. I just played my lottos. I played my lottos just say like on Apple, you're not gonna have daily expirations. I think they just weekly, right? So on a Friday, right? It's like on a Friday, I would look at, okay, what's the IV and what's the delta and how are we moving right now? Are we, you know what I'm saying? Are we like trending? Are we just consolidating? What are we doing? And then I will buy a lotto, you know what I'm saying? I will buy a lotto on that Friday because I know, okay, if we got this momentum, then I got the chance to you know what I'm saying, 10x my money real quick on something like the SPX, because this gonna expire today and we got this momentum, so I can play a put, because the IV is still kind of pumped up and we're getting ready to go into the end of the day, and the theta is still pumped up. So now, you know what I'm saying, I could play this put because I know this value of this is about to drop, right? Or I could play this call because I know this is, you know what I'm saying, this is pumped up, right? So it's pumped up. So if I get some kind of dip in it, I'll buy it and it's gonna pump again, and boom, I'll capitalize on that quick move just on the same day. But like holding it overnight, yeah, I got my head bust a couple times like that because I wasn't really up on the Greeks and stuff like that. And then people who was trying to teach me options, all they used to do is say like, oh, you got to learn how to read the premium. You just got to learn how to read the premium. And I'm like, okay, all I do is see numbers. I just see, okay, it costs this much. How do I know if that's expensive or not? And so I had to learn how to figure out if that was expensive or not. All right.
Yeah,
But we
going
gonna
last Thursday or Friday. So I was surprised that it was so cheap. I'm like $1. I'm like,
You say you bought it last Thursday or Friday?
yeah. Because I saw it in the news that Apple was having an event on the 4th. I'm like, oh, Apple's having an event on the 4th. This is pretty odd. I don't think they ever had events in the spring. I know they normally do their stuff in September. So I was like, let me find a lotto out there. And I saw that $300 for $1. I said, well, I'm like,
So
and
you
then
bought
obviously the stuff over the weekend happened. So I was
you
like,
bought it over here.
Yeah.
Oh man, you out of gas. I thought you bought it today.
No, I bought that last Thursday. It was still $1. It was only $1 even then.
Yeah, so you bought it here, and now today it was still $1.
It's still $1. Yeah.
Oh yeah, they got the IV pumped up.
Yeah.
They got the I. So your IV had to shoot up. Your IV, because if you bought it here for $1, and then over here it's still $1.
Yeah.
Your IV had to shoot up, because you see that move down.
Yeah.
Like that should have took you down to 0. If it's expiring this Friday, that should have took you down to 0, like coming all the way down here. So it's like they got like the IV pumped up on that right there right now. If it's still holding the value over, you know what I'm saying, they keeping the premiums really high. If it's still holding the value over all of these down days right here, over all that because coming down like this and then just consolidating right there, that this drop and that consolidation, that eats premium alive on the if it's going against you on the call side. This eats call premium alive. Like days like this, that's beautiful for calls and horrible for puts. Days like this is horrible for calls, right? And days like this is horrible for everybody when it just goes sideways, right? It's horrible for both sides unless you're selling premium, right? If you're selling premium, that's beautiful for you because you want it to expire worthless.
Yeah, my Weeble still says it's $1.
Yeah, Weeble lying to you.
Oh, they could be.
I'm just messing with you.
Oh, they might be. I said, I was like,
We gonna get Hitler to share pray for you tomorrow night at Bible study. We gonna get Hitler to share. Put Mark on the prayer list, on the sick and shut in options prayer list.
Yeah, I like you, man. I learned my lesson for buying stuff overnight expensive. I was like, I'm not doing that no more.
Yeah. All right. So, anybody got anything else? But yeah, just looking at the chart, right? Looking at the chart, Apple seems to be at a place where it's trying to maintain this buy program. Cause like I say, when we went back up into a premium here and swept out that buy side, right? We did not come down and take out any lows, right? We had to pull back into the inversion fair value gap, and then we rallied again. Like I say, the only thing I don't like about that is we pulled back to equilibrium, right? We came back to equilibrium. I would have liked to see strength in extending the buy program after retracing back to the inversion fair value gap. Why is that? Because when we set that breaker, we got an inversion fair value gap in the breaker leg. The algorithm came back offering that inversion fair value gap entry, because when we see the breaker with an inversion fair value gap, the breaker is the optimal entry based off of what the algorithm has done. It gave you that, but then it didn't break out again. It pulled back to equilibrium, right? Why did it come back to equilibrium? You see what I'm saying? That's that old manipulation out there, right? Manipulation. Maybe it came back to equilibrium because they know they had that big news coming out, right? Came up, you say you bought it around this day, you saw in the news they had an event coming out, so it came back to fair value and just stayed there at fair value, waiting on the news, waiting on the event to come out. That could be it.
You might be talking about 400 on Thursday. Who knows?
400, that's it. He'll learn to share. Fill out the prayer request form. Sick and shut in options prayer list. Hey, man. I appreciate y'all for tuning in. Hit a like for the algorithm if you ain't did so. Subscribe if you haven't done so. You want to be part of the gang? It's a link in the description. Second link in the description. It's $50 a month for new members. Come hang out with us, man. Tomorrow is our tape reading session for the week at 9 o'clock Eastern Standard Time. Be there or be square. Come with your note-taking utensils so you can study what you saw in price action. I think this NFP week. This is NFP week, ain't it? Don't we got non-payroll on Friday? Let me look at the economic calendar. Economic calendar. All right, we got PMI tomorrow. Oh, some petroleum, some other stuff. We got weekly job numbers, some other delayed information from the shutdown. Then Friday, employee situation. That's non-farm payroll, and then some other delayed information from the shutdown. Right? Non-farm payroll. Okay. You know, Michael teach that non-farm payroll can make the week act wicky-wonky. Right? Just like CPI can make the week act crazy. FOMC can make the week act crazy. And we see the week has been acting crazy thus far, especially during the New York morning session. Y'all know what I always say. It go through phases when different sessions be doing the Lord's work. And as we see, you know, we've been doing the Lord's work outside of the New York session. Right? Outside of the New York session. We've been doing the Lord's work outside of the New York session. Turn on New York. All right. The New York session has been This is the New York session. All right. Look at that. Ugly. This is the New York session. Ugly, move, ugly, move, ugly. Like how are you going to participate in this? Right? Ugly, blast off. Ugly, blast off. Chop, 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 chop. How do you participate in that? Right? This is the New York session. Right? Ugly, back and forth. Drop down. Take out the load. Come up like you're going to go down. Fooled you. Going back up. Right? Head bust. buy side, sell side. That's a bearish Judy swing. Trade back up. I'm gonna keep going up, right? And we talked about this morning, right? What do we say? We have taken out these lows, so you want to be careful with this bearish Judy swing. You want to watch and see if it becomes a wig snatcher. And oh, and look at that. Look at that. We didn't even drop down. Did we drop? We didn't even look at this, right? Remember this morning? Gang. Do y'all remember this morning when we talked about this? We said that we had our pre-market buy side, right? We was talking about these levels now. Y'all gotta remember when the levels be leveling. When the levels start leveling, pay attention. Pay attention. Right? And then let me turn all this other stuff off. All right. Matter of fact, I don't need none. I could delete all this. I'm gonna get out of here in a second. I'm gonna let y'all go. I know y'all like, this guy just said he gonna let us go, and now he on something else. But I just want to show this. Just want to show this. All right. Don't need this other stuff here. Get out of here. Get out of here. Get out of here. All right. So, Tim, what he talked about? 9:30 open. $9:30 open. All right. 9:30 open. Look what we did. Right? We talked about it this morning. Came up, immediately engaged with the pre-market buy side. Right? When we engaged with the pre-market buy side, right? What did that establish? We established our opening range high. Right? Rejected off the pre-market buy side. Traded back up to it once again. It was a lot of manipulation in here. Right? It was like we rejected this, so it's a high probability of going back to the pre-market sell side. Right? Took a lot of time, but we eventually, after setting our opening range low, right? We eventually made it down and took out the pre-market sell side. So price established a range, engaged with one side of the liquidity, gave a signature that it can possibly want to go to the opposite end of that liquidity, and then delivered to that opposite end. Now, when it delivered to the opposite end, it engaged with, well, prior to engaged to the opposite end, we engaged with the opening range sell side. Immediately engaged with the opening range sell side. All right. So then when we engaged with the opening range sell side, we didn't deliver immediately to the opposite end of the pre-market. But then when we finally delivered to that pre-market, we came down and we took out the overnight low / London low. Right? This is the complete overnight low because that's the lowest we went all night. So we took out the overnight low. So not only did we engage the opening range sell side, we delivered to the pre-market sell side. Then we took out a prior session / higher time frame sell side. And once we took that out, right, we immediately reversed and just took off, came all the way back, set relative equal highs for the opposite end of the opening range, retraced back down, institutional order flow entry drill into the bullish fair value gap that was made off of this displacement, and then delivered to the opposite end of the opening range. Right now, look at the difference between the delivery from the pre-market high to the pre-market low and the delivery from the opening range high to the opening range low. High resistance delivery, low resistance delivery, expansion, retrace with an institutional order flow entry drill delivery. Right? That's the difference between those two. You say, Tim, how do I know I could have trusted that? You don't. You don't know you could have trusted. Especially when you're going through all of this right here. From the pre-market up until then, you're going through all of this back and forth. Right? You don't know you can trust it. Just one of the things that if this is your setup, you take it and you put on your measurable risk. Right? Now, if you're taking that trade, you definitely wouldn't want to put on this amount of risk just to go right there. You would need more, right? You would need a lot more if you was taking that trade based off the 15-minute time frame. At least that, right? You would need at least that right there if you're trading based off that 15-minute time frame, because that's the mandatory stop for a fair value gap, right? And this right here, you can go to the low of the fair value gap if you know what I'm saying, really believe in the momentum. Then in that case, you would need that amount, and that would have been delivered to for you on the day, right? That would have delivered with very little drawdown, right? But you just enter the trades based off of measurable risk. But there it is right there. It played out what we was talking about earlier today on the live stream. Pre-market rejected, showed a signature of possibly wanting to go to the opposite end of the range, delivered. Opening range, right? Hit it. And once we rejected, came all the way up here, showing you signs of wanting to go back there, trace back down, delivered. Let the algorithm establish the range. Engage one side of liquidity, look for the signatures that it's giving you, then engage based off those signatures to target the highest probability liquidity. Yeah, y'all get what I'm saying. All right, man. That brings us to an end of another price action recap. Yeah, man. Hey, man. Till the next time I decide to get on Al Gore's internet and share my thoughts on this thing that we call price action. Who would that say, please do an options course? That's Steve. Steve say, please do an options course. Yolanda, Steve sound like you. Steve, like I told you, I have not taken that off the table. I haven't taken the options course off the table, but y'all know me. I'm retired and I'm lazy. And it, it takes work. It takes work I have to put work into, developing the course and doing it in a way that for something that I can learn from. If it's something that I can learn from, then I feel comfortable with putting it out, and I know it's something that will resonate with people. I don't just want it to be filled with a bunch of jargon and you don't know how to apply it. So I have to go back through and think about, how did I used to apply this stuff and how can I make it relatable to somebody else, right? And then, of course, I got to go back and brush up on all of the technical terms and have the exact information for you, you know, so it can be a tool of edification. Right? A tool of edification. All right. Anywho, gang, tomorrow, 9 o'clock. Everybody else, tomorrow at 6. We will not have any clips from tonight's stream because I'm about to go in and change my settings on my stream. Like, may have to lower the bit rate of the stream, and then I may have to lower the quality of, because I know right now my recording is set to record at like 4K. So I got to drop that down to 1080, and then I got my stream set to stream at 1080, but it's streaming at a really high bit rate, like as if I was streaming at 4K, because if I just got it set to be able to stream in 4K, but when I stream in 4K, I can't drop the latency down to like 3 or 4 seconds. It'd be like a 30-second delay when I stream in 4K, but that bit rate is set for 4K, so it's shooting all of that bit rate streaming, and it's trying to record 4K, so y'all see it went to hiccup in the night. So I got to adjust that, and if I adjust that and get it to where I can record 1080 and stream 1080, then I'll have the files to be able to go in easily and cut up the different segments. Because when I do it like that, right, when I finish talking about a topic, all I got to do is stop the recording and then start it again when I start talking about another topic. And then now I know, okay, this clip is all about this. This clip is all about this. I ain't got to go back through and try to listen and figure out, hey, what did I talk about there? Each clip, you know, y'all get it, man. Anyway, till the next time I decide to get on Al Gore's internet and share my thoughts on this thing that they call price action. It's your boy, Timothy Lee Rogers Sr., a.k.a. Aranya Grande. That just means big spot if you don't hablo Espanol, man. Y'all be safe. I ain't these trading streets, man. Go! Yeah.